Over the last year, the housing market in the US and in countless other countries has boomed. We've seen price increases that range from 10% on the low end to 25 or even 30% on the high end. But at the same time that housing prices were going through the roof, the price of lumber was soaring as well. By June of 2021, lumber prices had increased by over 280% in the space of under a year. That means if you had invested in lumber, literally pieces of wood, you would have performed better than the S&P 500, pretty much every cryptocurrency investor out there, and pretty much every hedge fund as well. It was surprising to a lot of people then when lumber prices started to crash. They crashed even quicker than they rose, and historically, lumber prices have always been closely tied to the housing market. The question everyone is asking is, if house prices rose with lumber, will they crash with lumber as well? That's what we're here to find out today, and I have a clip here that gives us a great insight into the connection between the housing market and lumber. But really quickly, if you're new here, subscribe to the channel. We're putting out loads of videos just like this constantly that you don't want to miss out on.
Analysts are always looking for ways to gauge the economy, maybe get an edge on it. We look at copper prices, we call it Dr. Copper for a reason, because it gives us an idea what the industrialized economies are doing. The difference there is copper comes from only so many different areas, and we can look and see what it's doing on a worldwide basis. Lumber is a bit different. When you look at local housing markets, we're typically not shipping lumber from the US to Europe, Europe back to the US. You can go cross-border with Canada, and of course that's a very big source. So when we look at the price of lumber, which has gone up dramatically, we see that housing prices went up with it. What nobody's saying is lumber has just fallen so far, week to date, 23% from its peak just made last week. So you have to take into account what it does, when it does it, and does that pricing make it through the market. Simply put, lumber's expensive, so are homes.
So there you go. Just like how copper and other industrial commodities like steel are used to gauge how certain industries and economies are performing, lumber can be used to gauge how the North American housing market is performing. Unlike copper, lumber is a regional product and it's rarely shipped around the world for fairly basic uses like building residential property. So the lumber market made and processed in the United States will be used in the United States as well. As lumber is a major component of almost every building in the US, high prices in the lumber market mean it's more expensive to build homes, while cheaper lumber prices mean it's cheaper to build homes. This impact on the production of new homes then affects the housing market as a whole, as supply may be increased or decreased depending on what's happening with lumber. All of this together means that the price of lumber in the US and in Canada is directly tied to their housing markets in a way that isn't very common. That's why the price of lumber and the average home sale price often mirror each other. In 2018, there was a spike in the price of lumber, followed by a similar spike in the housing market. And over the last year or so, there has been a huge spike in both the price of lumber and average home sale price. Why then are we talking about lumber? Well, put simply, the price of lumber has fallen a lot over the last couple of months. Following that huge spike in prices, there has now been a huge fall, and a lot of people are starting to predict that the housing market will also see a huge fall. Now, diversifying your portfolio can help mitigate risk. So if you have your money tied up in a market that crashes, you still have other holdings hopefully retaining their value. So what's an asset class that you can use to hedge against the market fluctuation? You might be surprised, but top investors frequently choose fine art. Probably not the answer you were expecting, but art performs much better as an investment than you might realize. Contemporary art prices provided an annualized return of 14% compared to the S&P 500's 9.5% from 95 to 2020. That's 2 times better than gold and real estate's returns over the same time period, and Deloitte estimates that the value held in art is going to grow by another 900 billion in the next 5 years. With results like that, it's no wonder that over 60% of high net worth individuals allocate over 10% of their investment portfolio to art. Now, people like you and me, we can't buy paintings with $10 million, let alone build a proper portfolio of art. But luckily, I found a solution. I came across this incredible investment platform called masterworks.io. I love this platform because it lets you invest in art by legendary artists like Banksy and Monet, no millions required. For the first time in history, everyday investors can diversify their portfolios like the ultra-rich have been doing for centuries. You just go to their website and pick the paintings you want to invest in. It's that simple. It goes without saying that there is a high demand for what they offer, such that there is a waitlist for those who want to invest with Masterworks.io. But I've partnered with them on this video to provide a link for you to skip that waitlist, so you can find that in the description. I highly recommend you check it out. So why are so many people predicting a crash or at least a correction in the housing market? Well, it starts with the falling lumber prices, but it doesn't end there. Obviously, with lumber getting cheaper over the last few months, more homes are going to be built. House builders may have been in a position to build homes with the workers ready, the plans set up, but decided that they couldn't afford to build them with the lumber prices being so high. But with those prices now falling, many more homes will begin to be built. And plans for new housing developments will start to be drawn up again. Very simply, it will be easier for house builders to make money on their developments now that lumber prices are falling again, and as a result, they can start building more homes. These homes will start to hit the market and they will increase the supply of housing. Buyers will have more homes to choose from and less people will be bidding against each other for the same property, and property prices could start to fall. At the same time as this is happening, there is a storm brewing in the offices of the Federal Reserve surrounding mortgage-backed securities. Now, for those of you who don't know what these are, they are basically bonds or investment vehicles that are secured by mortgages on homes and other real estate. Now, these securities are packaged up by banks, and right now they are being sold to the Federal Reserve by the billions every day. The Fed buys MBSs to ensure that interest rates are kept steady and that the bond markets are liquid, and it also has the happy side effect of stimulating the housing market. Now, put very simply, the Fed is in a really tough position right now. If they keep buying MBSs at a rate of 40 billion every month, then the housing market is going to continue to boom. Prices will continue to skyrocket, which may not sound like a huge problem, but a bigger boom cycle means a bigger crash when it ends. On the other hand, the second the Fed even mentions that they are thinking of buying less MBSs, what is known as tapering, the stock market and probably the entire economy will crash. This happened in 2013 and in 2018 in what is known as a taper tantrum, which happens when investors learned of the Fed's intent to reduce the pace at which they were buying treasury bonds. We then have the issue of inflation and interest rates, which has to be perfectly balanced by the Fed at the same time. Inflation is soaring, it's hitting all-time highs, and the Fed has notably been wrong on every prediction they've made. They have consistently underestimated inflation every month this year, and if inflation continues to rise, a prospect which many economists are starting to warm to, they may have no choice but to raise interest rates in an attempt to slow the economy down, prevent inflation from running away, and prevent losing control of the dollar. All of these issues are present at this exact point in time, and there really isn't an easy solution. It's starting to look like a crash, or at the very least a correction, is imminent. But there are a few things that are delaying that inevitable crash, and the truth is there's no knowing how long until that crash actually comes. The Fed seems to be more than happy to just keep chugging away, buying MBSs at the same ridiculous rate as they have been, ignoring the booming housing market. Now, while this would make the crash worse in the long run, if they really wanted to, the Fed could keep doing this for years. The rise of the Delta variant and the possibility of another worldwide lockdown has caused governments around the world to prolong their programs that were put into place to suspend a market crash. The eviction and foreclosure moratoriums in the US were extended just last week, which means the looming threat of mass evictions and a flooded housing market is just being pushed along as well. And if the political will is there, then there's no telling how long this could all last for. No one in a position of authority wants to be the one to end the party and bring on another Great Recession. They would all rather just prolong the inevitable until they're out of office and someone else has to take the heat. At some point though, something will give. Maybe those supporting the foreclosure moratorium will lose their political power. Maybe the housing market will inflate to the point that no one can actually afford a home anymore, or maybe the Fed will just decide that tapering is the only way out. We just don't know. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. Make sure to also check out this video's sponsor, masterworks.io. There will be links in the description that allow you to skip their waiting list and get to investing right away. There are also links in the description where you can get a guaranteed $25 from crypto.com, up to $250 in free Bitcoin from BlockFi, and up to $2,300 in free stocks from Webull. There's also a link to my favorite brokerage that I use called eToro, so make sure to check that out as well. Thanks for watching. Until next time.